improve the working ambience, and also cut down on raw material consumptions. We also have unparalleled focus on adopting global standards and systems accepted and recognized globally. We have received HIG FEM 3.0 average scores for all our sites, and we are committed to achieve stringent EU BAT norm for all our sites by December 2022. Key to create ecological value is to use less. On page 6, you'll see how we have reduced use of water, caustic, and focused on reducing emissions. Moving on to the third tenet, which is green ecosystem, it's about making an impact that goes beyond your own operations. The three pillars of green ecosystem are responsible sourcing and the supply chain, valuable partnerships, and social responsibility. We ensure that we source our wood pulp requirement for certified forestry that follows responsible practices. We work with our partners in the entire value chain to impart the importance of sustainability. We have partnered with Green Track that provides end-to-end supply chain traceability for textile industry. We have also been making a positive impact to the society around us for many years. As a company, we have actively engaged with more than 1 million people across several states. Our CSR spends are focused on education, supporting 25,000 plus students, health, sustainability livelihood, supporting almost 14,000 plus farmers, infrastructure development, and women empowerment. Our efforts towards sustainability has not gone unnoticed. Under responsible sourcing, VSF was ranked number 1 in Canopy's Hot Button Report 2020 with dark green shirt rating. The VSF business received the prestigious Innovation and Sustainable Supply Chain Award from United Nations Global Compact Network India in 2021. The business was given the award for its pioneering innovation relating to recycled and circular fiber made with pre-consumer fabric waste based on in-house technology. Let me now switch to the operational and financial performance of the company. The fertilizer business divestment process is expected to be completed by Q4 FY21 after receipt of NCLT approvals for the scheme of arrangements amongst other pending approvals. The reported financials has already classified it as discontinued operations. Grasim Premium Fabric Limited, the erstwhile Soktas India, which was a subsidiary of the company, has received the approval for merger with the appointed date of 1st April 2019. We are yet to file the final order with the ROC, but as substantial steps are already over, the financials of this subsidiary has been incorporated as part of textile segment of the company. In the fourth quarter, all our businesses witnessed all-round improvement in operational performance on back of strong consumer sentiments due to receding COVID cases. The financial performance of VSF Epoxy Textiles was much ahead of expectation in this quarter. The global textile fiber demand witnessed a sharp recovery in second half, led by spurt in consumer demand and restocking of the dried supply pipeline. The growing consumer preference for comfortable, casual, and value for money clothing has spurred demand for cellulosic fiber, and VSF has been key beneficiary of this shift. In India, VSF plants operated at full capacity for 2 successive quarters. The domestic demand grew by 9% YOY in Q4. The share of value-added products in the overall sales mix also improved to 26% in Q4 as against 22% in Q3. The VSF prices in China traded at their multi-year high in China. The VSF prices rose from 12,800 RMB in Jan to 15,800 RMB in March 2021. This was driven by strong consumer demand, restocking, and rise in cotton prices during the last 12 months. China's VSF inventory at plants declined significantly from 45 days in April to 13 days in March. The VSF business reported one of the highest EBITDA of 548 crore during Q4. As part of VSF segment, the VFY business reported revenue of 465 crore and EBITDA of 77 crore in the quarter. The chlor-alkali capacity utilization touched 94% in Q4 from 89% in Q3. The international caustic soda prices improved sequentially, led by temporary supply disruption in the later part of the quarter. In the chemical segment, the advanced material business, that is epoxy business, witnessed sales volume growth driven by demand across segments, especially wind and auto segment. The sector witnessed demand outstripping the supply due to raw material constraint, coupled with disruption at certain global manufacturers, leading to exceptional performance. Our consolidated revenue for Q4 rose to 24,399, up 26% YOY, and the EBITDA and PAT was 5,142 crore and 1,715 crore respectively, jumping 62% and 14% YOY respectively. On the standalone basis, excluding the discontinued operations of fertilizer, our revenue and EBITDA for Q4 stood at 4,394 crore and 880 crore respectively. EBITDA reported an YOY improvement of 121%. The revenue and EBITDA from the discontinued operations of fertilizer for Q4 stood at 561 crore and 33 crore and has not been included in the published financials. On CapEx, you may please refer to page 14 of the investor presentation. The total CapEx spent for FY21 stood at 1,508 crore. The CapEx plan for FY22, excluding paints and fertilizer, is rupees 2,604 crore, which includes the VSF expansion project at Vilayat, with line 1 scheduled to be commissioned in Q2 of FY22 and line 2 to be commissioned in Q3 of FY22. The other CapEx includes Grasim's plans to invest towards increasing its advanced material, i.e. epoxy business capacity by 125 KTPA. This would be done through a brownfield expansion at the existing location at Vilayat, Gujarat. This will include standard and specialty epoxy products along with curing agents. Being an industry leader, Grasim will continue to play a proactive role in growing and supporting the demand growth of epoxy. In the chlor-alkali business, Grasim plans to invest in 200 TPD caustic brownfield expansion at Vilayat. This would take the total capacity to 1400 TPD at its Vilayat site and will primarily meet the customer's requirement in the country's western region, including the requirement of a VSF business, which will also be commissioning its expanded capacity. The expansion will be commissioned in 24 months post receipt of statutory clearances and approval. The expansion of chemicals VAP, which is in various different VAPs, will improve the overall chlorine integration to about 40% by FY25. This is excluding what we plan to sell to our customers through pipelines. We have successfully commissioned 182 megawatt of new capacity in our solar business during FY21, taking the total capacity of solar to 502 megawatt. I would like to remind you that the solar business is in our subsidiary. It's not a division, so it's not included in the capex slide that you're seeing. It's a subsidiary, so it's separately captured. In next 2 years, we are scheduled to add another 343 megawatt of new capacities. Our balance sheet has stayed strong despite headwinds in half one. At the end of the year, the consolidated net debt stands reduced to rupees 8,831, a 58% reduction from March 20 levels. At standalone level, the net debt reduced from 2,999 crore in March 20, which included the debt of erstwhile Soktas, which has got merged now, to only 914 crore in March 21. Based on a performance and comfortable liquidity position, the board of directors of Grasim has recommended a dividend of rupees 5 per share for the year ended 31st March 2021. And in addition to that, a special dividend of rupees 4 per share, taking the total dividend to rupees 9 per share. The total outflow on account of the dividend would be 592 crore. In terms of outlook, we expect the second wave of COVID to impact the operational and financial performance during the lockdown due to the demand slowdown. But we expect the recovery to happen as smart as last year after the lockdown is over. With our inherent financial strength, operational excellence, and diverse product portfolio of cement, financial services, viscose, and chemicals, we've always demonstrated the ability to be resilient and rebound quickly. So now I would like to hand it back to the operator for Q&A.
Thank you very much. Ladies and gentlemen, we will now begin the session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Priyant Mahajan from Kotak. Please go ahead.
Yeah, hi, this is Sumangal Nevatia from Kotak. Thanks for the opportunity and congratulations on a good set of numbers. First question is with respect to the VSF business. A very strong recovery, but starting April, we are seeing some softness in prices and also cost is expected to catch up as far as pulp is concerned. So is it possible to share some color both on prices and cost in 1Q21? How is it moving? And also, I mean, what is the recent volume trends given the recent lockdown and restrictions in the country? Thanks.
Yeah, Dilip, yes. Dilip, you're there.
Yeah, no, I couldn't share the question properly. It is about Q4.
No, so Dilip, the question is regarding the second wave of COVID, how it has impacted price, volume, both price and volume, yes.
And something about pulp you wanted to know, right?
And yeah, and the pulp price because the cost is going up. Yes, sorry.
If you look at the quarter four, and as we were during the quarter four, the demand was very strong. I think India witnessed the highest ever consumption of viscose per day in the March quarter. And until the lockdown was imposed, the going was pretty strong in the Indian market. The prices also, global prices, have been at the peak in the quarter four, but those prices were exceptionally high because there was underlying demand, but there was a lot of restocking happening. So we expected some rebalancing of the prices to happen. So to that extent, yes, there was some moderation in the prices, but still the VSF prices remained quite attractive as the quarter ended. With the lockdown, because as you know, a typical textile from fiber to garment at least moves across 4 to 5 states. So whenever there is a lockdown, the entire value chain gets stalled. So to that extent, yes, there has been a demand bump, and I think that the domestic demand has come down significantly because of the lockdown, and particularly in South, where Tamil Nadu is hit very badly. And the April demand loss was about 25%, maybe even higher. So what we are doing, but the underlying sentiment remains very strong. So when you talk to the value chain, we believe that the day lockdown is lifted, there will be a lot of pent-up demand. So they pick up very fast. The good news is the global markets continue to remain very strong. People who have the export businesses are doing extremely well. So the export businesses are going full throttle. And I think the U.S. economy is doing well. The U.S. retail sales have done very well. European sales are doing well. So to my mind, I think once the road bump of lockdown gets over, the demand will come back to its healthy levels. Yes, like all commodities, the pulp prices also have run up. But there's no overdue. Because the pulp has run up with a lag of VSF. Because VSF has already, if you look at the VSF prices, they've gone up by 54% YOY. So pulp is not catching up. In our case, the advantage is that if you recall last year when the pulp prices were falling because our pricing is 1 quarter behind, we are always losing. But today, we'll at least for 2 quarters we get the benefits. Our conversion cost of pulp is not going as fast as the market price is going up. So to that extent, there is an advantage our business has.
Yeah.
Does that answer your question?
Yes, that covers it well. I think one more point, what has happened is that, of course, the spread of VSF over pulp has gone up significantly, and it is gone beyond even FY19 levels, which will normalize with the pulp prices also catching up.
Okay. So can is it fair to conclude that fourth quarter we've hit the peak in terms of profitability, so in terms of margin, given the benefit of lead in VSF prices versus pulp? Is that a fair assessment?
I couldn't hear. Can you repeat your question once again? The line is a little bad here.
Yeah, no, I think Dilip, what Sumangal is asking is that, is it fair to conclude that quarter 4 was the peak for viscose?
Yes, obviously, because you see, it was not only the demand growth, there was restocking happening. So it was a multi-year peak. Yes, absolutely.
Understood. Second question is with respect to the capex. So Ashish, last year fourth quarter outstanding capex was somewhere around 5,000 crores. This year we spent 1,500 and the plan is another 2,500 odd in FY22. So from our design capex, around 1,000 odd crores is still pending, which would be spent in the following year. Is that the right understanding of our capex plan?
No. So Sumangal, I don't think you should read it that way. I think earlier we used to give the sanctioned amount, right, which was more of an outstanding capex, and then we used to show year-wise breakup. Okay, I think to give better guidance to the market, because it was very difficult to give outlook of 2 years down the line what the capex would be. To give a better outlook, now we are giving 1 year outlook of capex, which is other than for paints, it is and fertilizer, it is 2,600 crores. So that's how you should be reading the chart. Don't calculate the balance amount and assume that would be the future amount.
Okay, but in terms of all our ongoing projects, will we be completing all the expenditures towards those in this year itself, or there will be some leftover?
No, so VSF 600 TPD, what I talked about, the 2 lines in Vilayat will complete in quarter 2, quarter 3. The chloralkali capacity expansion, which is ongoing in Vilayat, the current ongoing in Vilayat and Rehla, these two, and Balbhadrapuram. There has been some delay in these capacities to come because of the COVID. Okay, so the local situation in, for example, Balbhadrapuram is not good. So therefore, we are having to push out the capex commissioning. So there is some delay out there. In terms of Vilayat, new 200 TPD, we are giving a guidance of 24 months after receiving the statutory approvals. So these are the broad timelines of the current plan that I talked about. Jayant, is there anything that you would like to add in that? Please feel free.
The only thing I would add over here, Sumangal, is like our chloromethane. That will come up in Vilayat again, early H2. So Kerala will come in early H2, Bhivippuram phase 1 will come in early H2, and as the 200 fresh expansion, that will take another 24 months. So we have a fairly large set of projects which are going to be coming up in the chloralkali business this year, starting H2 early till the end of the year getting commissioned.
Understood. Thanks for these details. Just one small clarification. So the capex slide mentions X of paint. So does it mean that this year there will not be any start of capex in the paint business, or we are still very early to share details on that business?
Yeah, it's the latter. So there will be capex in paints business. But, as you know that it's only about 3-4 months back that we discussed about and entering into paints business. So we are still formulating our strategy and capex plan as we're going along. We're looking at land acquisition, etc., for the locations of our plant. So right now it's too early to say what the capex guidance for the year would be. So therefore, we are just maintaining the earlier guidance that was given right now, which is 5,000 crore over 3 years of capex. And as we get more clarity, we will feed that to our investors.
Got it. Thank you so much, and all the best.
Thank you.
Thank you. The next question is from the line of Nirav Jimodia from Anvil Research. Please go ahead.
Good afternoon, sir. Sir, I have two questions. So one is on VSF and then on chemicals. So first on VSF. Sir, VSF prices, like in the presentation you have shown that it has moved up from, the grey VSF prices have moved from almost $1.2 a kilo to almost now $2.2 a kilo. So how does the premium moves for the value-added or the specialty VSF? Because if I recall it correctly, in Q2 conference call, you have mentioned that premium for Modal XL is generally $1 premium to the grey VSF prices. So let's say grey VSF prices were $1.2 in Q2 and now at $2. So how does the premium moves for the specialty? Because what I find from the numbers is I think the value-added premiums have slightly shrunk as compared to what we were earlier doing. So let's say in Q4FY21. So if you can give us some sort of explanation here. And a related question for specialty VSF is that how is the market for specialty VSF in India? So how it is growing over the years, and if you can explain our market share in terms of the growth, what we have seen in the specialty VSF market in India. So this is about VSF, sir.
Good question. So I'll respond first to your premium part of it. If you recall our earlier conversations, I had told you that in the premium always goes up when the base VSF price is less. And
sir, your voice is slightly inaudible. Could you be slightly louder, sir?
Can you hear me now?
Yeah. So now it is okay.
So if you recall our two conversations on a couple of occasions, I have also mentioned that the premium goes up when the base VSF price goes down, because there is a band in which the premium price works.
Okay.
If you take a Modal price, there is a 18,000 to 20,000 RSP is the price.
Correct.
So when your base price goes down, you see a premium going very high. It went up to $1 plus last time.
Correct.
So that 3 years back in the history, when the prices were again $2, the
Yeah.
premium has gone down to $0.6. So there is always a healthy premium with a band, $0.6 to $1.
Okay.
Now, when the base price has gone up, the premium has shrunk to that extent.
Okay.
Second point is the other thing is premium is the premium products are a mix of, there is a modal, there is a dope dyed, there is a lyocell or excel, and there is a Liva Eco. So different products have got different premiums. You have to look at each category. So
Okay.
there is no flat premium across the board.
Absolutely.
The third is one product, which is the lyocell or excel product. There has been a bit of a structural change in the market because
Okay.
a lot of Chinese capacity has started being announced. Basically, they have not come on the ground, but it has been announced.
Okay.
Chinese has been able to make not the quality of excel or lyocell which perhaps we make or our European competition makes, but that is good enough for certain applications to go in the blend.
Okay.
So that had lowered because in anticipation of the very huge capacity announcement,
Yeah.
there was a temporary dip in the price of lyocell in Chinese market. So
Okay.
significant drop.
Okay.
Because one of the competition announced that I will say lyocell at just 2,000 RMB premium to viscose
Okay.
without anything on the ground.
Okay.
So the more sentimental response, but it is now recovering back.
Okay.
So you did see a bit of transition on the premium part of it, right?
Okay.
But the fact remains that in all these things, the market has been very strong.
Okay.
But one of the big saviors even all along has been the demand for premium market. I think the modal is doing extremely well. So there is a huge surge in the market across the world. The second part of the premium market, which I had spoken to you about, is called the eco-friendly variant of viscose. I think the brands have been very, very enthusiastic in receiving this brand. So a lot of commodity viscose has been moved to a eco viscose.
Okay.
Maybe you get a 15 to 20 cent premium. Now that is a huge premium but there is no difference in the fiber.
Okay. Okay.
What you do, you make it by a process which is more efficient. You make it with least and you give traceability.
Okay.
So that has been a very big change. So I think to that extent, the whole textile world is shifting more and more to specialty fiber. That's a good thing for the fiber business.
Okay.
And if you have seen our share of specialty is one of the 400 basis points.
Yeah, correct.
And the you asked a good question. Indian market specialty is moving significantly because we have got a CAGR of more than 20%.
Okay. Okay.
We had taken a very ambitious of growing the specialty market in India, which we have not exceeded. To our mind, I think specialty in India is taking off pretty well, and we have got the market leadership now. We have taken the market share. We used to be about 20-25% earlier. I think that's what has happened.
Okay. So the second question is on the chemical side. So if I see your quarter-on-quarter EBITDA, I think it has not moved up much. So one of the statement in the presentation is that caustic has seen some cost pressures probably. So the cost increase is mainly because of the power cost or any other reason? So this is one. And a related question is, sir, if we see for the epoxy, what you have rightly mentioned in your opening remarks also, what we have seen is that the percentage increase in the prices of LER is more than probably to all the raw materials put together, be it bisphenol or be it the epichlorohydrin. So, but when we see the profitability, I think it has not moved up much on a quarter-on-quarter basis. So, if you can help us understand that is there any lag effect which would be visible in H1 of FY22, and if you can give some understanding about our expansion also, because I think we have announced an expansion by 125,000 tons for epoxy. So are we also planning some backward integration like some of the players in India have announced standalone capacities for epichlorohydrin? So are we also planning same sort of backward integration? Thank you.
Jayant, would you like to come in for the cost side of the chemicals? Yeah.
So I think it's a larger impact on a flattish kind of a situation on caustic is due to the international prices, which only started seeing a little bit of an uptick in the later part of March of the last quarter. While on the commodity side, I think each one of us knows that the prices did go up. But I think our power management, we did a good job, and we were not impacted too much on the power cost other than the coal increases which happened. But the results are more because of the caustic price movement rather than anything else on that particular front. I hope that answers your question.
Yeah. Because I think ECU realizations were also higher on a quarter-on-quarter basis. I think what you're...
It is marginally higher compared to the earlier one, not significantly higher. So that's what I'm saying. The last part of the quarter, there was an uptick basically due to the winter storm in the US, which led to a little bit of a demand-supply situation, which did help to move the prices up.
Correct. Okay.
So in the cost side, basically there was some, also repairs and maintenance, etc., of the plant, which increased the cost a bit more than quarter three in comparison to quarter three.
Yeah.
On the epoxy front, I'll request Kalyan to come in. I think there are a couple of questions out here. Epoxy. One is on the prices increase in realization had increased quite a bit, but according to Viral, the margin is not reflective of that. Is it because of the cost increase?
Yeah. So I'll take that, Ashish.
Please go ahead.
So epoxy as a business has always been an extremely steady business for us. We are a business where we are now more or less sold out on our epoxy capacities. And what happened in the last 6 months has been more with bisphenol A. Globally, bisphenol A, for various reasons, initially force majeures, and later on a real severe shortage through supply chains, have not been very easily accessible, whereas the demand has been picking up for the end products, whether it is just as resins or in terms of our own formulations we offer up to the formulations, the specialties as well as formulations. So when bisphenol A became severely short, majority of epoxy players have actually not run their business plants 100%. They could only run at, say, 90%, 85%, 95%. What we have done is we look at it as product, as a formulation and as a solution. Within the raw materials that we had accessed, because we had one of the better supply chains, so we could get majority of our raw materials which we had planned for, at least in the Vilayat plant, and we have used it for gaining the key customers and their requirements, mostly from both products as well as solutions. So in a way, it's hypothetical whether a bisphenol A was low price or high price. It was not just available after a while. So it's about getting access, whereas once you get access, you would definitely be able to pitch it at a much higher price. What we expect in the next 1 or 2 months, this might flip slightly. We expect at least for the next month or so up to June, this quarter should still be fairly strong. Still, the raw materials are fully not available. When the raw materials are fully available by second quarter, the prices might soften a bit, but still we expect the market to be strong because end of the day, all of the downstream coatings, electricals, auto, wind, all are going strong. That's also one reason for us. We are sold out and we are looking at expansion.
Okay. On the integration side, sorry if you can.
Yeah. So very obvious. If you can think of it, we are the largest chloralkali player. We are the largest epoxy player. And we are highly integrated across the board. And we are a chlorine derivative player. So it's very obvious that we should be putting the largest ECH plant too. It is at an advanced consideration. It is being reviewed. It is being finalized. Maybe we will have something to tell you in a period of time, in a short period in future.
Thanks a lot for answering the queries in detail, and all the very best.
Thank you.
Thank you. The next question is from the line of Chirag Sureka from DSP Mutual Fund. Please go ahead.
Hi, this is Vivek Ramakrishnan. I just wanted to know about your leverage policy because your net debt has come down significantly, and the way I see it is, even given your capex, the funds from fertilizer sales, and internal accruals, you'll be probably net debt negative, or you'll be cash positive in the matter of a year or so. Could you just explain where would you like to take this? Thanks.
Yeah, sure. I think, I would not like to comment on it being net cash by end of the year because, we have certain capex plan. We've not yet discussed paints capex, but if you include paints capex, then it's possible that we will not be able to go back to the net cash position. But overall, if you look at the policy that we follow, is to stay AAA for Grasim. I think it's very important that we remain investment grade, both in the international as well as domestic market, because that's the leverage that I have in terms of my cost of debt and my ability to therefore undertake projects and implement projects. Our AAA balance sheet also helps a subsidiary like ABCL to get a good cost of debt as well. So it improves the return for the equity holders because of their margins, NIM, etc., going up. And therefore, keeping that in mind of keeping a strong investment grade balance sheet, we don't like to go, definitely not beyond 3 times on a net debt basis, but that's on the really on the outer limit where I have to get worried and start doing things like selling non-core, etc., to make sure you come back. But I don't anticipate our net debt to EBITDA ratio in the next 5 years going beyond 2.5 times, even with implementation of our paints capex.
Thank you, sir. That was very useful. Thank you.
Thank you. The next question is from the line of Prateek Kumar from Antique Stock Broking. Please go ahead.
Yeah, good evening. Thanks for the opportunity. So my first question is on your capex. So last quarter, we recall, while the numbers were not given very precisely, but we were sort of thinking of spending capex of around 2,500 crores for next 2 years, 22-23. Now we are saying at 2,600 crores for FY22. So just wanted to understand what is the new capex which is around in this quarter, particularly on new expansion projects on epoxy and caustic and otherwise.
Sure. So without giving the numbers, like I said, the new capex that is there is your Vilayat 200 TPD. So Viscose, there is no new capex. Let me first clarify that. Okay. In chemicals, we have taken Vilayat 200 TPD. And this is going to be an incremental capex is going to be very small because this is a brownfield expansion. The infrastructure, utility, etc. is all there in Vilayat. So there is no question of a large capex out here. Okay. Then there are a couple of value-added products, which is the chlorine derivatives, which we have also included. So we talked about chloromethane. So like that, there are few more that we have budgeted for. We are not disclosing right now for competitive reasons of what those products are. But those are some of the products that is there in chemicals. Then I've talked about epoxy. Epoxy, while it is not a very large capex, but amongst the capex between chemicals and others, other than VSF, which is pending, that is probably one of the larger capex that is there for epoxy. And other than that, in VFY, we are considering, and right now we've budgeted for a small CSY expansion. So you have 3 products out there: PSY, CSY, and SSY. And CSY and SSY are much better contribution products in comparison to PSY. So over a period of time, we want to make the VFY product mix more oriented to the high margin products. So that's why the whole idea is to put up some capacity in CSY. So that's broadly what the overall plan in capex is.
Sure. And the cost expansion, if you are looking to go to 1457 KTPA earlier, so that completes by earlier we were looking at 1222. Now that completes by when?
So voice was not very clear, so I missed what you asked.
The style caustic expansion where we were looking to have a caustic capacity to 1457 KTPA.
Yes.
That was expected by 1Q22. Now, when do we expect that capacity?
Yeah, sure. Thanks. So that capacity, like Jayant mentioned, is likely to come in second half, in the early second half. So there is it was supposed to have come in Q1, Q2, but it's got delayed to second half because of COVID. And what you see out there in the chart is additional 200 TPD, which I was so another 73 KTPA, which will take 24 months.
On VSF profitability, like the prices, based on our channel checks and industry interactions, like pricing look very high, strong Q-on-Q. It's sort of close to profit, but cost also seems to have increased by 15% quarter-on-quarter. So has there been already impact of higher pulp during the quarter, or is there some other cost which has hit the quarter?
No, so on VSF, there is no impact of high raw material cost in this quarter.
Only one, sulfur. Sulfur price has gone up and coal price.
Okay, sulfur and coal has gone up. I apologize.
And pulp, while the market has gone up by 30%, our consumption cost has gone up by 7%.
Yeah. So the real impact of the raw material cost increase due to pulp will come in only in Q2, perhaps. Q2,
end of Q3,
yeah. And my last question on the Soktas amalgamation. Since when has it been amalgamated? Full FY 2021?
Yeah. So what you see in the financial is the entire year's financials of Soktas is included in the financials of textiles. So what you see is 100% of Soktas.
No, it is for full FY 20 and 21?
Yes, that's right. Even the comparable figure. Absolutely right.
So I'll get back.
Thank you.
Thank you. The next question is from the line of Naveen Sahedu from Edelweiss. Please go ahead.
Hello.
Yes, Naveen.
Hello. Yeah, good evening, sir, and congrats for the set of numbers. Just one question, and sorry if it's a repeat, maybe due to bad audio, but what was the average pulp cost in Q4, and where are the prices currently?
So you want to know the market price?
Yeah, because I believe we are largely we are integrated. So if you could help us with our cost, as in what was our cost for Q4 and...
Even if we are integrated, we have arm's length pricing. So we buy pulp from our subsidiaries on arm's length basis. It's a market-driven price.
Understood. So what was that price for average Q4?
Q4 average pulp price of the China Q4FY21 is $918 per ton. Right? And spot price as a quarter ended was $1,100 per ton.
Yeah. So if I give you an indication, so that's the pulp spot price. Excuse me. In Q4, our consumption rate, right, would be, because we are getting advantage of the earlier pulp prices and our contracts, etc., would be somewhere around 54,000 per metric ton. That's it, the consumption price.
Understood.
But this will, as the time goes, like we said, it will go up.
Correct. So both from a pricing point of view, because there is some cool off that has happened to the VSF prices also. I mean, though your presentation says that March prices are 13%, March exit prices are 13% higher over Q4, but thereafter, clearly there is some easing off that has happened, if not more, at least 1,000 RMB to the China prices, and cost is also going up. So fair to assume that there can be a decent sort of a margin pressure in the coming 1 to 2 quarters, right?
The other way to look at it is that Q4 was exceptional margin quarter. It was not a normal margin. Normally you see a good VSF business has a VSF to pulp delta of 0.9. And that delta went up to almost 1.3, 1.4 in Q4. So that was an abnormal quarter. So I think what we compared to is a healthy margin quarter.
That's fair. I was just looking at slightly longer term, in the sense this current quarter margins were at 24%, and historically, a peak has been even higher, upwards of 35%, and so just from a longer term, perspective, given, let's say, China is acting up towards some of the environmental concerns, so slightly broader question, and this is more from the feedback that even in metals, we're seeing China acting towards these environmental concerns and hence shutting some factories. So is there anything that is happening on VSF front from a broader perspective which can see that margins can or prices can see uptick, or this is what the range bound it is?
There are two things in VSF what is happening. The biggest question mark is the cotton. China makes cotton in Xinjiang region, which 85% of China's cotton comes from there. And that cotton has been banned by the US and European brands because of the human rights violations, and major sanctions are there. Now, if that happens, it will be happening already, and that's why there could be a run-up in the cotton prices. And the moment cotton prices go up, the viscose gets the benefit. So one of the big upsides is what happens to Indian cotton issue with the China. Because there is no way China can substitute the Indian production if they have to win the export market. If they don't do it, then the market gets vacated and people benefit because of that. So either way, it should help the business. And that's the upside. Now it's a way to see how it unfolds. We can't predict how it will unfold.
A fair point. Right. Thank you.
Because cotton prices have gone up despite the fact that people thought it might come down. So today cotton prices are pretty high. Both the cotton yarn prices as also the cotton prices. And the export of cotton is going to happen in a big way into China. So that's the concept.
Okay. Thank you.
Thank you. The next question is from the line of Prateek Kumar from Antique Stock Broking. Please go ahead.
So thanks for the opportunity again. Given the very strong exit of caustic chlor-alkali prices for March quarter, so our margins can be sort of quite different in Q1, let's say for 22, or they should be range bound here as well because of higher cost?
Would you like to take?
No, so I think, it's difficult to give us guidance for Q1,
We had a very strong margins in caustic segments also in FY19 and till FY20 also first half. Then it started to fall in line with industry, I guess. But with now the improving prices, I'm not sure if they're sustainable. But should we see margins of chemical segment improving going forward?
Yeah, so maybe I'll take that, Ashish.
Yeah, please go ahead.
Yeah. No, so I think the assumption very clearly, even in terms of our aspiration for this year, has been that it should be at least equal or higher than the previous year. And hence, we are expecting or we are hopeful of it. 2 or 3 things which are concerning us. Number one, in the first quarter, because of the second wave, we have some difficulty in certain segments for at least 6 weeks. The second concern we have is we were expecting certain projects to take off by end of first quarter, early second quarter, and then that's coming towards the later part of the year, the second half, as Ashish mentioned. So both will have a slight impact on the overall year ahead. What we are banking on is what was unexpected last year was the V-shaped recovery. If really the markets recover as well as last year, it's not improbable to imagine that we would at least partially recover this. But it is too early, as Ashish said. We can't really say it's going to be as good or better or worse. We're taking 1 quarter at a time. This quarter, I think we want to just see how May goes and then June how it recovers, and we'll take it from there. Thanks.
Thank you. That was the only.
Thank you. The next question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Yes, sir. Dhanyavad for the opportunity. In continuation to as been remarked, sir, when the first wave of COVID hit, it was all of a global phenomenon. But now, as we see that the international markets have opened up and the utilization levels there, industry-wise, are coming to their pre-COVID levels. So, in terms of that scenario, sir, how well is this caustic market shaping up? And sir, what kind of imports have happened for the last year, and what should be the situation going forward this year, sir?
So let me take that, Ashish. I think, yes, you're right. At the end of the day, when you looked at Q4, you had till the winter storm coming up a robust global demand on caustic, including India. And practically all of us grew, and we did actually better than the Q4 of the preceding year on volume basis. At this point of time, I think caustic demand is actually linked with chlorine demand, and chlorine demand is largely globally linked with the vinyl demand, which is doing very well. Whereas vinyl production or PVC production in India is not there, and that's why the impact is significant over here. Plus, it's a localized wave 2 that is impacting the situation currently. But even like last year, it took us about, if we looked at it from the removal of lockdowns to getting back to peak, it took about 60 days, and the entire industry was up and running in late 80s of capacity utilization. And that is what I think Ashish and Kalyan have been alluding to, that if the situation changes, it will change very fast because the inherent underlying demand continues to be there. And globally, we also expect that the demand will be robust. As regarding imports, I think the entire supply chain globally was disrupted. So we did see a marginally about 10-15% less import compared to last year. But that is also because the Q1 literally was a washout for the whole industry, as the large capacities were not up and running. We expect the imports to continue at the same pace as they were last year in the current scenario, and largely to the eastern and the western part of the country. which is coming from your Japan side or Southeast or Northeast Asia. So not too much expected on the import side. It will continue to be at the same pace as about 3.5 lakh tons annually, which came in earlier, will come in now.
And sir, on the anti-dumping front, sir, something was initiated earlier a few months ago. So what is the update on that?
So the update is, I think with the entire COVID situation, the investigation pace has slowed down. We've had a couple of meetings with the body, but I think till the investigation is not over, we will not be able to comment.
So taking these factors into account, the price trends in the caustic market are likely to be subdued only because if the recovery in other chemical segment or other market have not led to recovery in caustic soda realization, what factors would lead to recovery? I think so. It is still hovering around that $300 band, something in that vicinity.
You're right. It's hovering in India at about a 300 shade less than $300 band.
Band se nikalne ke liye, what would be the factors that will reverse this downtrend in the ECU realization that is there for, I think, the last 2 years, if I'm not wrong.
So, see, your point is basic. Caustic is the basic chemical. So it goes into all the commodity applications. And at this point of time, any capacity which comes in, it's like a step curve. When the prices are very high, a lot of capacity additions took place. We expect that lately the capacity utilization for the industry has gone up. And also the recent trends in the last quarter, Q4, we did say that the prices of caustic have moved up slowly. We expect that trend to continue. But it is again a function of larger clarity coming when this COVID wave 2 settles down and we start seeing the industries and the lockdowns opening up. So it's very difficult at this point of time to say anything on that front. More so, the current capacity in India is about 20% higher than the current demand, 20-25% of the current demand. So it's a combination of the lockdowns and the capacity, which is keeping the caustic price. I would not call it subdued. It's basically being at this point of time, it's not being able to keep pace like it used to keep pace in the past.
Very small point. And we are also coming up with new capacities. Now, not only Grasim, other players also have someone has commissioned also, and people I have lined up fresh capacities, say 6 months, 1 year, 2 years down the line, including you. So in that case, there has to be a demand push to keep up for these expanded capacities going forward and plants running at higher 90s. Otherwise, the fixed cost and the variable cost metrics will also dampen down the margins level. That assessment is correct, sir?
No, I will not be able to comment upon what the others are doing. I think everybody understands and looks at the market situation, looks at their own customer base and capabilities, and then arrives at, and it's not that you can set up a caustic plant very easily. It takes you about 24 to 36 months to put up a greenfield and about 24 months for a brownfield. So all in all, we all believe that caustic has a great future, being a basic chemical, and that's what is moving this industry forward. If you look at from our consumption scenario or our demand supply, we're just about not even yet at a 5 million ton capacity. But the good part, what is happening is the chlorine story, which is improving quarter on quarter, and that is what is also now balancing the echo, which was earlier mostly skewed towards caustic and chlorine as of now. So I think there is potential in this business to grow further, and that's what is being read by the entire industry, including us.
Right. And for the chlorine derivative part, my concluding remark, for the chlorine derivative part, so what percentage of our chlorine goes to the downstream, and how much is the market sale?
As Ashish put it, I think we gave a figure. There are two parts we look at chlorine. One is the entire VAP story, which by 2025 we will be at 40%. and then there is a pipeline by which goes to a industries along with us or our ancillaries or what we would call it. If I would take it for 2025, we will be somewhere around 65-ish odd percent, 60-65%, which will be consumed by this particular mode, and the balance will go to the market.
Yeah, right. So for just to repeat, 40% WAP, another 25 would be pipeline, and the balance would be merchant sale.
That is for 2025, sir. I'm asking for
currently.
I'm asking for currently.
Yeah, so currently about 27% is WAP.
27 plus pipeline takes it to about 40%, and the balance 40-45%, 50-55 goes to the market as things.
Right. And so one of your competitors are developing a product, hydrogen hydrate. They are coming up with a capacity, and as per their presentation and all, they will be the only player in the country. So have we looked into this product also, and the demand scenario? What are the metrics in it?
So like we've been saying quite earlier, because of competitive reasons, we don't want to get into a discussion what we are analyzing and studying. But let me assure you on one part, there are multiple products that we are analyzing, studying, and looking at, and at the appropriate time when we reach the comfort level is when we will get into announcements.
Just to add a couple of points.
I'm so sorry to interrupt. May I please?
Sir is only answering. Yes, ma'am. Sir is only answering me. I have concluded. Just please allow sir to conclude. Yes, sir. Please conclude.
I said what I had to say. That
it was interrupted. Yeah. Hello.
Yeah. No, so I can add one last point. I think,
please.
First of all, globally there are no new chloralkali investments. They are just getting relocated. You might have heard there's been closures in US and elsewhere. Each of the players in different countries are making choices. So there is a huge amount of relocation going on from west to east. So globally, as the demand is going up globally, the new investments are not actually coming globally. They are only getting relocated. India is actually seeing a growth. Second, I think we don't invest on a next 2-year basis. We invest it based on next 30 years basis. And we see, as Jen said, a very, very strong growth option there. And we'll continue that. And the last one is, we'll fundamentally see, unlike in the last 10 years, we'll fundamentally see chlorine being making a lot more leading product compared to caustic in future, just like what happens globally. We will see more of that and more of chlorine derivatives and chlorine pricing, which is going to determine the eco levels in future than before. So we have seen all types of products. Again, when we look at derivatives, we look at derivatives where how much of chlorine intensity is going into these products. As Jen said, I think we are doing a lot of calculation, but our scale is very large, unlike other competitors. So when we look at it, we will have a much more focused conversations on selective chlorine derivatives than all of them. Thanks.
Thank you, sir. Thank you for all the answers. And all the best, sir, and stay safe. Thank you.
Thank you. The next question is from the line of Amit Murarka from Motilal Oswal. Please go ahead.
Yeah, hi, good evening. Most of the questions have been answered. Just had one quick question on the timeline of the fertilizer business realization. So I believe you had guided for 1 year completion. So that comes to around September to December. So are you still confident of being able to receive the funds by then? And the second question to that is it fair to say that the capex for the paints will only start after the realization of the funds from the fertilizer sale?
So the first question, you got it absolutely right. So I think by September we'll be able to complete the process and receive the funds. On the second bit, paints is irrespective of fertilizer. So it's not that we will start. So we will right now the first dollars of paints will go into acquiring land. So which is already we're actively looking at, and we have started deploying that. And of course, I'm not talking about employee expenses and also that are already started. from the capex point of view, land will be the first one which we've already started doing.
Okay, sure. That's all I had.
Thank you. The next question is from the line of Bhavin Chheda from Enam Holding. Please go ahead.
Yeah, good evening, sir. So what was the VFY top line and the EBITDA? If I missed out from your presentation. Give that number.
No, I had mentioned it in my speech. It is 465 crore of revenue and 77 crore of EBITDA.
77 crore of EBITDA. Okay. And the other thing, I think the voice was not clear. I missed out because of the Q1 lockdown. How are your factories operating currently, both chemical and VSF, and what would be the utilization level at both in the Q1 or current month?
I take on the VSF?
Yeah, please. Yeah.
So I think VSF, all our factories are right now running full capacity, except Harihar, because normally every year we take an annual shutdown for the Pulp plant. It was supposed to be taken in the first week of June. So that we advanced to this month of May. So I think this is a good time to finish off all the shutdowns so that when the demand comes back, we have full capacity available to us. That's the only thing we have done so far. Let's see how the lockdown continues, and then we'll review the news once again. One more thing we have done is, like last year we did, as the lockdown happens, we focus more on exports. So there is a lot of exports we are doing from the Indian market right now, so that our plants remain fully utilized. So export of fiber, as well as we have converted one line to non-woven in Kharach, and maybe one more line will convert. So we start making again non-woven in Kharach, which will export into Europe and US market till the time the India normalizes. That's why we are making sure that the plants are utilized fully.
Okay, thank you, sir.
Thank you. The next question is from the line of Nirav Jamodia from Anvil Research. Please go ahead.
Thanks for the opportunity again, sir. So continuing with the earlier question, so like you mentioned that we are going for more of the exports of the specialty VSF, what you mentioned about non-woven. So sir, it is safe to assume that we are selling more of modal and excel in the domestic market, and dyed and other value-added products are exported. So the mix looks like more of modal and excel is sold here domestically. So the realizations are higher in the domestic market as compared to that of the export market for the specialty VSF, sir.
You are right. So you see, modal is sold in domestic market and exported both.
Okay.
So about 30 to 40% is sold in local market and balance are export.
Okay.
Lyocell again is sold in domestic market and export, but 30% domestic, 70% export.
Okay.
And the domestic you get slightly better price because of the freight advantage of what you have.
Okay.
Non-woven, the good thing what will happen in non-woven is non-woven get into quarterly contracts.
Okay.
We have been able to sign very high price contracts because we negotiated them in the last quarter.
Okay.
So that is a good advantage. So I think the non-woven exports are going to be much better value than one would normally expect.
Okay. Okay. And yeah. And sir, if you can, because yes, sir. Yeah, continue.
One more point I would like to inform. We used to make our Liva Eco, which I told you, the Eco variant of our viscose fibers. We have now started manufacturing in Vilayat.
Okay.
The new project that has just got commissioned.
Okay.
Big export from Grasim going forward, because Liva Eco is a huge demand by the global brands. Which we started product about a year and a half back, and we have almost grown manifold. It is a high growth area, so that will start happening now.
Okay. Okay. And sir, in the presentation you have given the exit prices for China VSF as well as the starting prices also. But if you can tell us about our realizations for the grey VSF, some sense, some idea about how we have been, so our realization.
For Q4?
Yes, sir, for Q4. For grey, sir.
Yeah, so our, you see the problem is our realization has been broadly in line with the China, slightly plus minus. The issue is, you see, as I told you, China is an indicative price.
Correct, correct.
The Indian market is governed by the local conditions, because what happens, like how the value chain is doing. Now, because the build-up in the Indian market was slow,
Correct.
And we didn't start booking in January, Feb, March, it went up full capacity. So our price also went up gradually.
Correct.
March, my price was about almost like international price.
Okay. So the full catch-up happened in the month of March, correct?
That's right.
Correct. Sir, and the last...
We don't shouldn't price the product just because China is selling at some price, because my value chain has to be able to afford it.
Absolutely. And sir, the last and final question is on the epoxy. So, sir, if you can give some sense of the percentage growth in our absolute EBITDA on a YOY basis. So, let's say, as compared to last year, last Q4 of FY2020 and this Q4 of FY21, how, in what percentage terms our EBITDA has grown for the epoxy?
So epoxy would be almost a big growth actually. If you look at QOQ, for example, QOQ would be almost close to twice.
Okay, so it's almost double.
So and you know, Q4 of last year was quite depressed because that was a quarter when you lost one whole
month almost.
1 week, of this one. So you could assume that 1.5 times compared to Q3, 1.5 to 2 times roughly, but much more in comparison to Q4 of last year.
Got it. Thanks a lot, sir, and all the best.
Yeah, thank you.
Thank you. That was the last question for today. I would now like to hand the conference over to Mr. Ashish Adukia, CFO, for closing comments. Over to you, sir.
Thanks. See, I think we're all going through difficult times personally, so I hope everything is safe at your end, and please take care of yourself, stay safe, and of course we will connect again in the next quarter. Thank you.
Thank you.